On any given day, at any given moment, investments are being strategized. And in a world with over 7 billion people, it's hard to find a one-size-fits-all money management approach. There are, however, portfolio managers who firmly believe in a consistent style through all markets, one that creates value through long-term objectives and by avoiding investment fads.
Well, the most serious one, the one that's most prevalent among both individual and even professional portfolio managers, is their willingness to follow the crowd instead of do something different than the crowd. This leads them to sort of an undisciplined, short-term version of investing that I think is ultimately probably pretty fallacious. It shows up in when markets have been rising for a while. There's even more people start investing in them. When markets have been falling for a while, fewer people invest in them.
Staying the course isn't always as easy as it seems, especially when you consider dips in the market that feel more like nosedives. Harris Kempner Jr. explains that these are normal occurrences in the investment landscape and that investors should remain focused.
It is better, in our opinion, to have a goal that says your money's going to be worth more in real terms after an extended period of time than it was when you started, which means essentially that you have done better in terms of total return than the rate of inflation over time. We think 3 to 5 years is a minimum time, but it seems to us extremely important to differentiate between that and doing better than a backward-looking index or even other money managers.
The nature of investing involves some degree of risk. When building a sophisticated portfolio, it is imperative to be disciplined, patient, and focused, and not simply following the herd.
I've been a portfolio manager for about 45 years, and Kempner Capital Management has existed for 30 years. Well, 33 now, to be precise. We have continued to invest with patience, with the same approach, the same style, unchanging through all the vagaries of the markets, and we've satisfied enough clients so that they've allowed us to stay in business. I think there's no more answer than that.
Located in Galveston, Texas, Kempner Capital Management has served clients for over 30 years. With Harris Kempner Jr. at the helm, the investment team utilizes a disciplined, deep value approach to investing in equity portfolios with an emphasis on long-term total return. It's a bottom-up process that identifies companies overlooked by other investors, but show promise of becoming better regarded within a market cycle. The firm also manages several fixed income accounts.
So for equities, we're value equity managers, which means primarily we're scouring the markets looking for stocks that are selling below their intrinsic value. So in order to ensure that we maintain a deep value philosophy and discipline, most securities we look at will entail 5 basic criteria. Once we identify stocks that meet those 5 criteria, we then put the security through a rigorous analysis of both quantitative and qualitative analysis to determine value and therefore relative attractiveness. If we do decide to purchase a security, we have a maximum purchase size of 3.5% of the portfolio. That helps us achieve adequate diversification. The best way to achieve our services for equity investment management is through our mutual fund, the Frost Kempner Deep Value Equity Fund, the ticker of which is FIKDX. And then on the fixed income side, we invest entirely in U.S. government securities. And so on an individual issue basis, we examine the security's coupon interest rate, maturity, yield to maturity, and the existence of any inflation protection. And then we allocate our assets across the term structure maturity curve based upon our outlook for interest rates and inflation. The best way for investors to invest in our fixed income philosophy is through our fixed income mutual fund, which is the Frost Kempner Treasury and Income Fund, the ticker of which is FIKTX.
We are not timing markets, absolutely not timing markets. We cannot do that. I don't know anybody who can. But we do have a tendency to build cash as a buying reserve when markets are going up. We have a tendency to invest more, sell less when markets are coming down. It's logical because if you're a value manager and you're looking for bargains, more bargains will appear when markets are washed out, or if not markets as a whole, markets in specific areas which are out of favor.
Kempner Capital Management works closely with clients to ensure transparency and alignment of financial goals. The highly experienced management team here seeks to help clients understand the role of deep value investing in completing their financial picture.
We've been around for a long time and proven our worth. That's probably the most important thing. The staff here is very good at client service. We're accessible. When people need us, we're there. But what feels good is that I'm directly and indirectly involved in making people's lives better by helping them to essentially have more money in real terms at the end of an extended period than they did when they started, which I think is at least one way of making people's lives better and making, therefore, in some ways, the world better.
To learn more about Kempner Capital Management's investment strategy, visit kempnercapital.com today.